Of course, market focus right now is on global growth as this holds the key to dissipating solvency concerns in developed markets. Let's get Standard Bank's perspective right now on the growth scenario that we're looking at.
Hi. Yes, good morning, Alishia. To some extent, economic activity in most systemically relevant economies seems to have stabilized since the softening that we saw in August last year, and large liquidity injections by the ECB has also steadied some nerves regarding the Eurozone debt crisis. However, I think it will be foolish to extrapolate and assume really that major economies are out of the woods, or that financial markets, for that matter, will enjoy a tranquil 2012. We do believe that developments and events in countries such as France, Italy, Spain, the US, China and Iran as well could possibly impinge on sentiment going forward. We have thus penciled in growth of below 2% for the United States, given the developments that we have seen. But if you look at the Eurozone, for instance, while conditions seem a little bit more benign than what it was just a couple of months ago, it doesn't necessarily mean that the Eurozone is out of the recession. We are still penciling growth, negative growth of 0.5% for this year, and it's only likely to tick up to about 0.5% in 2013. When you look at China, for instance, we are starting to see the Chinese economy running out of steam, and while indications have suggested that we may possibly have reached the bottom of the cycle, the downward trend, forward-looking indications are suggesting that that bottom of the cycle is only likely to occur in the second or third quarters of this year. So the global economy's growth going forward still looks as if it's in a pretty precarious position at this point.
Yep, very much so. And, we had these diminishing expectations of QE3 out of the US, specifically standing in the spotlight because, we saw it lifting the dollar index against a basket of key currencies, and that to its highest level since March the 26th. What do you make of the kind of dollar underpin we're seeing right now within this growth scenario you've highlighted?
Well, yesterday's comments from the minutes of the FOMC really seems to have been flip-flopping between a hawkish stance, a dovish stance, and then a hawkish stance again, with the QE refusal coming through again. While there are concerns that that's not likely to be on the cards, the US economy seems to be in a better position than most economies at this point. But the FOMC has indicated that rates will probably remain unchanged at least until 2014, towards the latter end of 2014. But this may not actually materialize. We could possibly see that being brought forward, or possibly even later, if developments in the in the United States deteriorate or possibly improves more than what we're currently expecting. So it's really those conditions that are underpinning the dollar at this stage.
So in terms of trading the currencies, I mean, Lindsay was highlighting a little earlier on in the show with Grant Watson, is now the time to be buying the dollar and selling the euro?
Yes, it could possibly be that. We are seeing that the conditions in the Eurozone, especially with regards to Italy and Spain, and the fact that they may miss their fiscal targets this year, that we could possibly see further pressure on the euro in the next couple of weeks. So it's really going to be a close eye on those economies again. The attention has been steered away from the Greek economy and more focused on those conditions, and whether we're going to see further weakening in the Italian and Spanish economies.
Of course, Shireen, it's this global dynamic that's influenced the kind of, levels we've seen the rand weaken to, the rand taking its cue from global developments, yes, but also from the bond market. We've been reading, partly tracking weaker government bonds after a weekly auction was poorly received, and that due to investors' concerns about oversupply coming to the market in the next month. What do you make of that and the kind of contributing factor that adds to rand movement?
Oh, definitely adds a major contributing factor, with the risk-on-risk of sentiment really providing a lot of the direction. And as you mentioned, it's really the rand is going to continue taking cue from what happens in the bond market and international developments as well. If you look at yesterday's data, for instance, we saw vehicle sales data come in slightly lower than what markets had been expecting, with growth coming in at about 4.8% for March from 6.4% in February. But the rand really didn't react to that sort of data. So it's really taking its cue from what's happening abroad and further out, rather than what its indications from data releases that we are seeing showing direction from the South African economy.
Shireen, let's leave it there. Thanks so much for your time this morning. Shireen Darmalingam is Macroeconomic Strategist over at Standard Bank.